Good day. Ira Epstein of Linn and Associates with your metal market wrap-up. And this wrap-up is for Monday, and we are now at the 22nd of March, 2021, just after 6 p.m. Central Time. So as we take a look at the marketplace, you're up again tonight in the stock indices. Metal market's a little bit of a bounce, a big beating today in the silver market. Copper just sort of hanging around, if you will. Foreign currency markets, same thing. So there's something very evident. You're not trending in a lot of markets. You've got higher highs, lower lows in a number of areas. The energy markets have patterns like that. Bonds and notes are like that. You've got it even in the stock indices when you see the financial markets. So we're doing one of these right now. As the market is digested, and the word is past tense, the Fed meeting of last week, the idea that the Fed isn't going to do anything in the further out, be it the 7-year, the 10-year, the 30-year bonds, they're focused still on the short end of the market, and that's where they'll stay. I read today some of what Fed Chair Powell will say in front of Congress tomorrow, because there is a joint meeting between he and Ms. Yellen in front of them. And as he talks, he's going to be honing in again on employment. But if you think about it, the Treasury's job is fiscal, and the other part of fiscal, and it still is in the Fed, but they have two mandates: full employment and inflation control. So they're not with the rest of what the governments and the states have to do. They're what they have to do to achieve those two goals. And the Fed, in the prepared statement, still is very concerned about wage earners and that there's still too many of them not employed. So that is where I think the focus sits. As for the gold market, you continue to stay underneath this 18-week moving average of closes. Not anything very pretty there. You had this one swing to the upside, and after that, it was a head fake, actually. I was looking at it over the weekend, and that was where the market just sort of caved in. When you take a look at this action, all you can say is that the market had another leg to the downside, and like back here and here, we've had a bounce very similar. It hasn't proven that it can lift out of here and do anything. So traders are waiting. I look to the swing line for ideas, and the pattern is certainly one of higher lows and potentially higher highs. If you take out 1760.60, well, that will break that pattern. What about where the support of the market is? Well, if you look at the 18-day average, it's right here. And where's the Bollinger Band? Here's what they're doing. They're wrapping their arms around the trade, and they're dropping down where the resistance point and where the support point would be via them. Last, here's what I'm bothered with. The market is overbought. So I have an overbought market. It's used a lot of its power to get back up here. Between here and 1753, so $15, the market runs into the upper Bollinger Band. The support's at 1722, but I don't know that the trade in an overbought condition that's nowhere near converting itself to what we call embedded, locking in that stochastic, doing anything. I'm having a hard time with that. The gold-silver ratio, since it crossed over the 18-day average, even though it dips back occasionally, it hasn't gotten back under that, which tells me gold is stronger than silver, and you see that on the chart. Here's one of those patterns that I was talking about where you have a higher high and a lower low. You're going to see more of them. You can see how the market keeps dipping to the 100-day average, getting bounces from there, seems to have constraint back at that 18-day average of closes, and I can define this as no trend, downside bias, flat momentum. When I come to the copper, you've had the pattern of lower highs, lower lows, but like the other markets, you're still wrapping that Bollinger Band. You're narrowing it in more and more. You're overbought. The last rally high was back here, and that number is 416.15. You haven't been able to get over that number. So if you can't get over it, what happens is all that this is noise in the market. Now let's assume it gets over it. Then I'm going to have a pattern with a lower low and a higher high. In other words, as I said at the beginning, this is not turning out to be what I call good trading patterns. In the platinum market, the short-term trend is down. You have lower highs, lower lows. Momentum is pointing down and bias is down. The resistance is 1188, but that to break through up here, that's $50 away. So I don't know how aggressive the shorts are getting. If they can break the market, 1137.10 might be a number. As we look at the palladium market, you had a violent move to the upside. You went from roughly 22.50 to 27.49. In the process, you stayed 1, 2, 3, 4 days in a row over the upper Bollinger Band. It's like pulling on a rubber band. It's going to snap at some point, and you pull back within, and you did that today. Today could have been the 5th day. It refused to do that. And the market is still basically in an overbought condition with higher high, lower low. There's just nothing to really do that I can see in that market. Am I bullish? I am. In fact, I want to go on record. I'm bullish on all the metals because I still believe when COVID situation gets under control in Europe and we're no longer talking about the COVID, it'll be a question of demand, meeting the demand, durable goods around the world, and factories humming. That's what I think. Am I right? Who knows? In the dollar index, you now have a lower low, higher high. Again, one of those patterns that bothers me. Support's back here at 91.51. I've seen a number of traders come out that they are now bullish on the market. I've noticed that if you looked at the CFTC reports over the weekend, the trade is no longer as short this market as it used to be. And they were wrong. Since the beginning of the year, this was the big trade that was supposed to break down, and that was back here at the 90 level. Now, in all fairness to traders, win, lose, or draw, you're only 91.74. So you're not even 1.5 in percentage points away from where you were there. So let's 10%, is that what it is? 10.5% is the difference. Okay, if you add the whole thing together, that's 2.5%. As I look at it, because you're adding, what, 90 points? I'm doing it in my head. So there's one way I go to 10%, but it's really 1.5. And they're throwing it at how? I don't know. If the fundamentals were bearish before, why aren't they going to stay that way? And that's what I question. Either way, there's no trend that I'm seeing on that particular market. It's a lot of talk there, but not a lot of momentum as I see it one way or the other. I want to remind you, if you're interested in our products, just go to our website, www.iraepstein.com. What do you do there? You'll see the free offerings. Give it a ride. Pick the ones you want. We'll get them to you. I'm Ira Epstein. You have a good day.